after wait of 4 years, finally Insurance Act Amendment Bill is tabled in Parliament, and this bill is named as Sabka Bima Sabki Suraksha. So 100% FDI is allowed under the bill to attract new foreign insurers. Foreign investors get greater management control. Indian presence is also mandatory for governance. At least one chairperson, MD or CEO must be of Indian residence. Other than that, the class of insurance business is also defined. So bill clearly defines insurance business category. 5 classes recognized: life, general, health, reinsurance, and the 5th one is any further class which will be announced and notified by government in consultation with IRDA. So there is a scope for composite license also. Going ahead, government with consultation of IRDA can allow composite license also. So scope is open as per the bill. Next point is IRDA is empowered on the commission, remuneration and reward. Presently also IRDA only decides the EOM expenses, expenses of management limits, but as per the bill, IRDA is empowered for the commission, remuneration and reward. So EOM, which is equal to expenses of management, management expenses plus commission. So there will be more transparency on remuneration and rewards also going ahead. This will help in help to curb the mis-selling of insurance products. Going ahead, IRDA to frame investment regulations also. So 50% investment in government securities for life insurance, 25% in government bonds. For general insurance, this is 25% investment in government securities and 10% in state and central bonds. So this is also mentioned in the bill. Insurance and non-insurance mergers is allowed. Positive for Max Financial Services because this change in rule will simplify the corporate structure. The capital requirement for reinsurance, a big boost for reinsurers. Reinsurance capital reduced to 1,000 crore from earlier requirement of 5,000 crore. This will encourage more global reinsurer to enter in India. Open architecture is not mentioned, so big relief for companies like LIC, ICICI Pru, SBI Life. So individual agents cannot tie up with more than one insurance company of one segment. Policyholders Education and Protection Fund is also mentioned in the bill. So objective is of this fund is the policyholder education, policyholder protection, and source of this fund would be the penalties collected by IRDA and government grants. So policyholder fund will be there for insurance awareness. Transparent regulation making is also proposed, that rules making process will be standardized, public consultation and transparency and accountability will be there in insurance sector going ahead. IRDA is empowered to recover wrongful gains. So in public interest to protect policyholders, wrongful profit or loss avoided must be returned. So going ahead, we'll see that the profit of insurance companies may be taken up also if they found of a wrongful gains. One-time registration for intermediaries. So big relief for brokers. Intermediaries, only perpetual license you have to take. Same like insurance company. Once you got the license, you need to pay the annual fees only. Previously, every 3-year registration used to be there. So big positive for companies like Policy Bazaar and other brokers. Share capital transfer norms relaxed. So earlier for 1% also you need to get IRD approval, but now approval needed only for more than 5%. So that reduces the compliance burden on the insurers. And finally, the LIC gets the greater autonomy. LIC now can open new zonal office on their own. They can oversee branch funds to follow the local country laws. LIC is free to decide procedure of internal committees also. So these are the major highlights of the Insurance Act Amendment Bill, which is finally tabled in Parliament.